In the last three trading sessions, the market had an explosive rally with the SPY bouncing over 4% off of this key support zone here at the 540 strike. This 540 strike has been an important support zone for the last several months, serving as support and resistance, but mostly support as we've been trading above this level for the majority of the time, with just this brief dip down here at the end of July. And now we're back into positive gamma exposure, as we mentioned in our last couple of videos. And now we are at resistance levels here. You can see between the 560 and 565 zone. These are two important, very large positive gamma exposure levels here. We've been at these levels too multiple times over the last several months, and here we are again. So the key question for this week is, will the FOMC meeting serve as a catalyst for further upside, finally breaking out to new all-time highs? If so, we think the 570 strike is the most likely target by the end of next week. So a lot of it's going to come down to what the FOMC and what Jay Powell says in his press conference. So we'll talk a little bit more about some trades that we're looking at for next week. But first, let's just jump into the CME Fed Watch tool. We've got 3 days before the FOMC meeting begins. And so here we're just looking at the current probabilities for the target rate. Just last week, we were sitting at 85% for a 25 basis point rate cut. But with all the economic data that came out during the week, those odds have actually shifted to where now we're at 50-50. This is for a 25 basis point rate cut, and this is for a 50 basis point rate cut. So the odds are split right down the middle. It is very possible, according to market probabilities, that we could be down to 475 to 500 basis points by next week. So we'll see exactly what the Fed is planning to do on Wednesday, but at least according to market probabilities, we're seeing a 50-50 shot. So let's take a look just further out into the Fed meeting calendar. The probabilities are increasing now for further rate cuts into 2025. We can see that by mid-2025, the market is putting the probabilities in the camp of a 275 to 300 basis point Fed funds rate. And so that represents over 200 basis points in rate cuts within the next 6 to 9 months. So this is a significant shift of what we've been seeing over the course of the past several months in these probability measurements. Taking a look here at the 10-year, 2-year yield curve un-inversion, we saw just the past week or two that the yield curve has been un-inverting. This is the longest period of time in history which the yield curve was actually inverted, and now we're finally breaking out of the zone, coming to an uninverted yield curve. And many market participants take this as a signal that the economy is starting to slow. We've come off of this really hot period here in this zone with tighter economic conditions. And now that we're coming out of it, the view is by many market participants, not all, but the view by many are suggesting that economic conditions are too tight. All of that to say that the FOMC meeting this Tuesday and Wednesday is going to be extra important to watch. Let's just take a look at the market heat map. This is the performance of the market by sector over the past 3 months. We can see that the worst performers have been the mega cap tech trade, Nvidia, Microsoft, Google, even Broadcom and AMD. And we've really seen the rally start broadening out, the financials picking up, retail trade picking up. A lot of the sectors that have been not doing so good over the past year have really started picking up just over the past 3 months. Narrowing it down just over the past week, we can see a significant shift here. Actually, we see Nvidia rallying over 10%, most of that coming at the end of this past week. Microsoft doing really well, Amazon doing really well. And just a few of the laggards were the financials. They had a huge rally over the last 2 or 3 months, so it's not surprising to see them pulling back. We also see energy weak over the last several days as well. Now let's go through a few names that we're watching watching for this week. The first is Meta. Meta, along with a lot of the large mega cap stocks, has been trending lower, just had a great bounce this past week. We've been eyeing the 550 strike as a possible target into September, maybe into the October options expiration. We still think that's a possibility. We're kind of looking for potentially for a breakout above this 525 level. We actually already had a position in Meta over the last couple of weeks. Obviously, the action over the past several days has brought that back into profitable territory. And so we're going to be looking to exit that position this week and potentially adding another position heading into that October OPEX. And so if the market can continue its strength, we think Meta has a really good shot of reaching into this 540 or potentially the 550 zone with a large gamma exposure concentration there. Another interesting name that we've been watching is Amazon. Amazon, with the rally last week, was really a continuation that started back since the beginning of August. And so we think that there could be some consolidation up here at the 190 strike. This has been a resistance zone a few times over recent history here in the end of July. We think that if we can break through that zone, potentially into October, the 200 strike would be our final target, potentially in the October options expiration or the end of October timeframe. So that could take some time to play out. We're talking about a 5 to 7% move. But again, if we can get through these resistance zones here at 190, you can see this is our dealer cluster level. This is where the largest gamma exposure concentration is. But one of the things that we like to watch for is gamma exposure growing at higher levels. And we certainly see that here at the 195 strike and the 200 strike. This is reflective of open interest growing at these strikes, which basically means market participants are building positions, either selling calls, buying calls, selling puts. There's a lot of different positions that they could be building, ultimately meaning that price has a stronger chance of gravitating to those levels. And so that's another name that we're going to be looking for, potentially building a position ourselves in to target those levels, potentially collect some premium from some option selling strategies. The next name on our list that we're watching is Apple. Apple trading in a relatively narrow range here between the 230 strike and the 220 strike for, going on like 6 weeks now. Really a very narrow range. You can see we've bounced multiple times off of this zero gamma range here, and that was just below the 220 level. We see large gamma exposure concentration here at the 230 strike, and so it doesn't surprise me that this has been kind of the zone that we've just been bouncing in. There does seem to be a little consolidation here above this 220 level, and so I think this is a good candidate for a premium collection strategy, something between the 240 and the 220 strike. We like to use butterflies, double diagonals, double calendar spreads. Those are great premium collection. You can build a tent, so to speak, over those levels. And so as long as price trades anywhere in this range, you'll be collecting premium, especially the closer you get to expiration and the closer you get to the middle part of your tent. And so you can see here how the gamma exposure levels can show you the structure of the options market and help you build your tent around those zones. And so that's what we look for, just to help us get a little bit of an extra edge when we're measuring our risk reward probabilities. And so we invite you to come into our community Discord. I'll put a link down in the description below. We'll continue the conversation, discuss all the different strategies that we're watching for in the coming week. Definitely come on by and say hi. We'd love for you to join us. Also, if you're interested in accessing our gamma exposure dashboard and any of the other data analytics that we provide, head on over to geeksoffinance.com. You can check that out. We also have our Geek University course, which is included in all memberships. The course goes through option strategy, gamma exposure, our trading approach, as well as a number of other topics. Definitely check that out when you get a chance. Thanks so much, everybody, for watching, and we'll see you guys in the next video.